Vincent, full year results today from Daily Mail General Trust, and I guess our older viewers probably think about the Conservative paper, our younger viewers probably obsessed and spend many hours away from work looking at the Celebrity Obsessed website. But it's a company that's more than that. But first, how are that media side of the business doing first?
Well, it's interesting. I mean, it has balanced, away from the pure sort of old line newspaper business a good deal over the last decade or so. The newspaper side is holding its own, but it's print advertising is about a quarter of revenues now. I mean, it used to be way higher. And the newspaper business is about half of the company, so half of revenues, but profit-wise, its margins are sliding, etc., etc. So it's hanging in there, and the Daily Mail is a very profitable beast still, unlike lots of other newspapers. But it is at the same time a shrinking business, just taken by itself.
I mean, millions of eyeballs on the website. Is that converting to money?
It is in a way. I mean, they don't charge for the website, but they do get a lot of advertising. So there's about sort of £30 million of advertising that the website contributed in the last 12 months, which is not bad. I mean, they could monetize it, I suspect, much more if they wanted to, but they seem very reluctant to put up a paywall. I don't think that's their strategy at the moment.
And the good results today and the big jump in the share price mostly came from other businesses within the group, which are doing very well and are a lot more focused on America, aren't they?
That's right. I mean, Daily Mail and General Trust is increasingly an American company. People think of it as the Daily Mail, and that's a very British institution, but actually, as a corporate entity, DMGT is increasingly America-focused. And it has a very strong business-to-business, digital, online operation in the US that provides all kinds of obscure but high-margin things. For example, it has a business called RMS that provides catastrophe risk management solutions to insurance companies. Right? Now, who'd have thought of that? But there you are. That's what it does. Very high margin.
And it's got some other data businesses as well. And I guess a big part of the share price rise today was a share buyback announcement.
Yeah, there's a share buyback announcement, not a modest one, about £100 million, and that has contributed to the share price rise. The shares have done quite well this year, actually. They're up about a fifth. But DMGT is still trading, it's still a bit of a discount there to Reed Elsevier or the German company Axel Springer, which it resembles to a large extent. There is a bit of a valuation gap still there that surrounds the DMGT.
And do you expect that to close, or did that discount represents the fact that it is a media company with newspaper exposure?
I suspect it does, actually. You might call it the Daily Mail discount. DMGT is still half of a sort of old line media company, newspaper publishing company, and half a very 21st century digital business. And one is starting to pull the other along. Alternatively, one is starting to drag the other back, So I think that tension is still there, and that's why there's probably still a bit of a discount.
Well, a rare success story in the media sector. I'll stop you there so I can get back to the Daily Mail website. Thank you very much, Vincent.